Hi, my name is Stephanie Walter with Airbay Wealth. My website is www.erbewealth.com, and you're listening to EA Interviews.
EA Interviews, episode 363.
Inspiration, transformation, success stories, and the imperfect action round. 7 days a week. Join Mario Ficini for today's Expert Authority Effect interview.
Expert Authority world. Have you ever thought about what to do with all the profits that you're making? Have you been thinking long term? You know, it's one thing to have a successful company and have the profits, but what about wealth? What about your net wealth? What about long term? What about the future generations? This is a topic that's near and dear to me, and it's why I'm excited to have Stephanie Walter, CEO of Airbay Wealth, on the show today. And she's going to be sharing with us the financial and investing secrets the wealthiest 1% use. And I got some questions I'm excited to ask her right after we thank our sponsor. Every business needs a book, including yours. And that's why I'm launching my new book to help you regardless of where you think your current writing abilities are. Visit eapublishingmethodbook.com today to learn the 7 steps to publish and promote your nonfiction lead and profit-generating business book in 8 weeks. Once again, that's eapublishingmethodbook.com. Here she is, ladies and gentlemen, Stephanie Walter. Stephanie, how are you feeling today?
I'm doing great. Thank you so much.
I'm excited to have you on because a lot of people talk about business and success, marketing, sales, yada, yada, profits. And I'm one of them because it's like all the time I'm talking about all these, but far and few in between people are thinking long-term. And I shouldn't say that. There's a lot of people who think long-term, but I think just as a society, people are talking about wealth, and net worth, and just long-term investing less. Why do you think that is?
I think that people at this time are they're scared of the unknown, and there just seems to be a lot of uncertainty right now in what's going on. I do get that from a lot of investors I work with. I try to target investors that are kind of new to the alternative investment space, and there's just a lot of caution, a lot of just like, what's it going to do if we have a crash? Just lots of questions and uncertainty about inflation and all of these things that a lot of us haven't seen.
So how would you answer them if someone's saying, I don't know what to expect over the next 2 years, the next 5 years, whatever the case may be? How do you respond to that? And also, no matter what's going on in the world, because in my experience growing up, it seems like there's always something, regardless of what it is. It might be bigger or smaller, but, I'm trying to think of the word here because it's like in 100 years, there hasn't been anything like the pandemic, but at the same time, I'm thinking back to the economic S curves, and every 7 to 10 years, things are shifting around. The recession in 2008. It always seems like there's something going on. So how do you teach people to prepare for the future without knowing what it's going to be, I guess, is what I'm asking.
Well, I mean, my background is in what I have people investing in are syndications, which are real estate. Largely for us, they're apartment complexes located in very good markets across the country. And if you look historically, syndications have been around forever, hundreds of years. But let's just look at the last few recessions and how they perform. I think that's a huge, great indicator to know that these particular asset classes do really well through recessions for lots of reasons. I try to tell people to, just to go back again, like what you're saying. Historically, there have been recessions, and so look at what you're wanting to invest in and see how it's done, how it has done through, whatever turbulent period we're in. I think there's a lot of misinformation out there too, which, it's hard in this day and age to try to sort through what's true and what isn't. But I mean, COVID for multifamily, if you located those properties in the right markets, they've all done incredibly well. And I'm not sure that that's really a message that people would hear, listening to the regular news or
Okay.
anything like that.
So tell us about the 1031 exchange. Why is that a good thing?
Oh, the 1031 exchange is, if you own a rental property or business, it allows you to sell that business or property, and you can roll the money over tax deferred into a syndication. And but there are also lots of different tax solutions that the very wealthy use, and they really shouldn't be just reserved for the very wealthy. But like in our syndications, there's something that we use quite often, which is called cost segregation. And really that is just, you speed along depreciation. So rather than take your depreciation over 28 or 39 years, we speed it up by getting these studies done up to 1, 5, and 7 years. So when you're buying a 10 or $20 million asset, those cost savings are very significant for the investors. But whether it's the 1031 or cost segregation, I think what I noticed from working with very wealthy investors is they are constantly aware of what their tax, with every investment of what they do, what the tax ramifications will be. And they're always planning ahead to reduce those as much as possible.
How far ahead generally?
Well, if they purchase into a syndication, they're wanting to know kind of the exit strategy. So if they're in the property from 3 to 5 years, they have it all usually planned out pretty well before they get into it.
What would you say to someone who has never gotten into real estate before? They're a little afraid of doing it, because with every successful industry, there's always those stories like, well, I used to do that, but, and then yada, yada, whatever. They had a bad experience with it. Why do you firmly believe in it so much?
Well, I think you look historically, again, at who are the types of people that have invested in syndications. And largely, I really think since the beginning of the internet, before that, it was largely taken up by the very wealthy. Insurance companies and banks are people that really took up this space. And then I think as more information became more readily available on the internet, this is something that's become available to more and more people. But I was just listening to an economist today talk. It was really, really interesting. Actually, I learned quite a lot just about, inflation and what, they're predicting. And what he said is, one of the best places to be is in tangible assets. Now, those can be, and that's honestly what I see a lot of the wealthy being involved in. So the number one tangible asset is real estate, investment real estate. But also, there's art, there's, just things, businesses, rather than, being in the stock market, which there really isn't a tangible asset that you have there. And the real estate, they said historically through inflations is one of the best places to be.
Now, I saw something on your one sheet when we were going through approvals to have people on the show, which really caught my attention. I want you to share with Expert Authority World here how you were able to retire at such a young age. And congratulations, because I see that you've done that recently.
Yeah, I don't know how you, not that young, but yeah, I actually retired. I just sold my agency in July of this year. I was an insurance agent before I did this. And I actually just got into in syndications and raising money for syndications just a few in 2016 is when I started doing that. Before then, I had invested in, single family homes and things like that. But really, I had a long-term strategy, which is to hold on to these, houses until they were all paid off in 20 or 30 years, and then I could retire with the cash flow, hopefully, is what the idea was. So with syndications, I was able to, start raising money for some of these. And by doing that, I was working with a lot of wealthy investors. And I really noticed that they look at their money a lot differently than I did, or most people I know, in the sense that they're using their money. They're not just accumulating it and letting it sit in a bank or a 401k or even an investment property. They're constantly letting their money work for them at all times. And by working for them, I'm saying cash flow. And once I really started focusing on that cash flow and, having that work for me, having my money work for me in different ways, then it didn't take long, for me to get to this point where I'm able to retire.
It's so inspiring because I think that's everyone's ultimate goal. And some people think of retirement as like sitting on the porch looking at the lawn. I don't see it that way. I see it more as, you have a point where you have more income than you need necessarily. That's not even it. Because you can always use more to do good things with, I believe. But a lot of people think you need age to retire when really you just need the income. I think what I'm trying to say is when your income exceeds the expenses you have and you no longer are tied to it, that's really the goal. So congratulations on that again. And I think it's great that you're helping people, move forward down that road, to get there quicker. For someone who's listening and doesn't know, how would you describe a syndication?
A real estate syndication is just a fancy word for a group of people that buy a commercial property. And in our
A group of investors?
Yep, a group of people. Now, those are split up into the management group, which in my case would be myself and my partner. And then once we look at hundreds and hundreds of deals before we find one that really makes sense for us to bring investors in and to close on it. So when we do all the due diligence, we run the numbers, we examine the market very thoroughly and know that this is going to work, then we go ahead and go out to our investor base and bring our investors in as passive investors. So the people are like, okay, passive, yeah. What does that mean exactly? Passive in this case is truly passive. You bring your money into the deal and you are paid a percentage of a preferred return as long as we hold the property. And in our cases, we're on our 8th deal together, and we routinely are returning our investors over 20% annualized returns. So so it's a different kind of structure, but essentially you as a group and through an LLC are buying a property, and then the professional team of myself and my partner and our employees are running the property, while our investors do passively invest, and then they get reports sent to them on a monthly basis on what's going on in the property, as well as then they get that monthly cash flow check. So it's a way of investing in real estate where you don't really truly have to do anything.
It sounds fantastic, because I know with traditional real estate, for people who rent places out for that monthly cash flow or flip them or whatever the case is, no matter what, someone has to maintain the property, someone has to upkeep it. And then you're dealing with a property manager that may or may not, it sounds like you have the whole thing encompassed and taken care of. So what is the range of an investment for the syndication?
As far as the amount of the investment is usually between, we have, most of our properties are 100,000, but we do have spots for people with 50,000. And then it kind of goes up from there, but the minimum is 50 to 100,000. And then we hold the properties usually from 3 to 5 years. And so the money is, technically in that investment for 3 to 5 years, but the investor is paid every month with cash flow while we hold the property. And each property we sort of have a plan for, like a business plan, like this is what our plan is for this property. So it's very clear what our intentions are and what we're planning to do with the property.
So are you saying the houses are typically 100,000, so you could get 2 people in at 50, one in at 100?
Oh, that I might have misspoke there. So no, our properties are usually, we closed on a property last week for 10 million, and then we're closing on another property before the end of the year for 18 million. Now we go out and secure the financing at 75%. So then that remaining 25% is what we raise from our investors. So for the property for 3 million, or for 10 million, I was raising about 3 million for that property. And for this one for 18 million, I'll be raising about 6 million. And that 6 million can be, investments as little as 50,000 all the way up to, I've had someone invest 2 million at once. But those are the investment amounts
so someone could put in $500,000 or $1 million, but you're saying the minimum is 50 or 100,000.
Correct. Yeah.
So if you need to raise $3 million, you could have 30 people at 100, 60 at 50, or you could have 3 people at $1 million.
Correct. Yeah. And so our investments are usually pretty small. The one we just closed on for 10 million, we had, there's about 20 investors in that one. So it's a nice group of, it's not, with some syndications you can get involved in, they're pretty large, but ours usually, we're between 30 and 50 investors.
Now, what happens to the property after the 3 to 5 years? Do you sell it and liquidate, or do you keep it, or can anyone buy it if they want to?
Yep, that's usually, it kind of depends on the property. We have some properties that we know clearly that we want to sell after, we achieve our goal. Really is pretty simple in that we want to double our clients' money within the hold period of that 3 to 5 years. So we do have a couple properties in Tallahassee, Florida. Florida is our huge market. We love Florida. That's where we invest. But we have a couple that are pretty small down in Tallahassee, and we have already within 3 years doubled our clients' money. They're very small properties. They're, I think, 34 units and 32 units, and we're going to sell those and then move on to larger properties. But it is very likely with some of the properties we've been buying this year that they're more like legacy properties. And so when it would get to that time where we've doubled our clients' money, we would go back to them and ask if they want to continue to invest, get their money out, get their returns out. And if they want to continue to invest in that particular asset, if they want to invest in a different one, or if they just want to take their money and do something else with it.
So on the $100,000, they'd be looking at 10 or 20 grand profit. On $1 million, you're looking at 100 to 200,000 profit.
If they invest $100,000 in our deal, they're going to but they will get their investment back, or their initial investment back of 100,000, and then they'll get,
roughly 20%.
They'll get another 100,000. It's usually more than that, but yes.
Okay. So you're saying the ones you doubled that you were saying it's 20%. At least you've been averaging, but some of them you're doubling.
Yep, but it's 20% a year. So we're within that 3 to 5 year period, we're looking to
Okay.
have doubled their money. Yep. So that 20% for 5 years would be 100%.
So that's
So
even
that would,
better than I was thinking. So it's not
yeah,
20%, it's 20% a year. That's it annually.
correct. Yep. Mm-hmm.
Excellent. So do you have a target of how many I was going to say houses, but it's not. It sounds like
No,
commercial buildings. Um,
correct. Yep.
do you have a
It's
target of how many you're looking for over the next 5 years, 10 years?
uh I think my partner has a very clear idea on that. I mean, for me, and this is the way it's been since the beginning of us working together, is just finding properties that make sense. And some people in this industry go out and try to take down a 200 or 300 unit building, and for us, we just wanted to make our investors happy so that we would have, a long-term relationship with our investors, which they're our number one priority. So we started more in 20 units, and then got up to 30 this year. Or a couple of years ago we were at 50 and 60 units. This year we're going to be closing on one for 160 units. So we don't
Congratulations.
have we know we want to get bigger, but we want to get bigger with an asset that makes sense, something that
Yeah,
we
you don't want
can.
to just get a 500 unit place for the sake of saying you have a 500 unit place. You
Right.
want,
Yep.
okay.
Exactly.
And correct me if I'm wrong, this would be the assets under management.
Yes. Yep. That's
Excellent.
correct. Mm-hmm.
Well, it sounds like it's going exceptionally well. I'm happy for you. I do want to ask you, though, out of everyone you've invested with, who would you say, everyone who's invested with you in the buildings and all the deals you've done, what would you say, or who would you say is your biggest success story?
My biggest success story. For me, it's because I have a lot of, wealthy investors, and really I spend my time now, like I was telling you earlier, I go on probably 2 podcasts a week to try to let people know about this type of investing. So always my, happiest, you know, person that I've worked with, and most satisfied, is the person that wasn't sure that this, didn't understand it, kind of understood it, but was like, I'll give it a whirl. I'll try to invest that $50,000. And then they kind of see it all play out. They get their tax, that huge tax liability their first year of owning the property, which is usually a great surprise to them. And then they invest again and again. So I have a person that started investing he was very early on with us when we accepted 25,000, and he is going to be investing in his fifth deal with us, and he has just put in 400,000 into that investment, and he has been investing with us since 2016, and has doubled his money in each investment between 3 and 5 years to each investment. So yeah, so he that makes me happy because that has changed his life and his family's life, to where he was in a very busy profession, and he's able to just have a lot more freedom now to work when he wants to.
Yeah, I mean, it sounds good to me too. I don't know anyone who wouldn't want to double their money, and also in a relatively short period of time. I mean, I think there's so many people out there going, "Oh, we're going to do all this stuff overnight," and it's kind of like, really? And if you
Yeah.
do, is it legit? But
Hmm.
also, you know, I would never put anyone down who's taken 10 or 20 years to do it, because it's still faster than, I mean, it's really not that long in the grand scheme of life. But I think 3 to 5 is a nice sweet spot where it's, you're doing it, you're doing it in a systematic way where you can keep replicating it.
Yep.
That's the thing. I mean, there's plenty of people can do something one time, but I like to align myself with people who, they're doing it for real and consistently, regardless of how long it takes, because frankly, it doesn't matter. But and I'm talking business in general now. It's like,
Yeah.
but yeah, 3 to 5 years really isn't that long. So, um, I have one more question. Well, two more. I've been correcting myself the last couple dozen episodes. So I used to say I have one more question for you before we thank our sponsor, but it's really two because the first one is yellow or black?
Is the first question is what?
Yellow or black?
Okay, black.
Oh, thank you. You changed it up. I feel like the last dozen people were all yellow. Oh. And it doesn't make any difference on the question which one it is, because if you look,
awesome.
You see your question spinning there?
I see it.
Okay, that's going so, the spin was going so well, I thought it would take 5 minutes to stop. So black. Here we go. So my question for you is, after retirement, starting this new, having the success with it, where would you like to travel that you haven't been? And would you buy something there?
Yeah. I would love to travel. And that was actually, I had a big birthday this year and was hoping to go to Iceland and had the trip all planned and everything. And then we just were unsure with COVID how to do that. So we ended up going to Alaska instead, which was amazing in itself. But yes, for sure want to go back, want to go to Iceland. I've never been, always have wanted to go. And there's a lot of places on my list, but that's the first one.
Excellent. Both sound nice to me, and I'm sure it's beautiful. You can't go wrong with the snow and ice.
Yeah.
All right, we're going to thank our sponsor and come back for the imperfect action round. You've heard me say every business needs a book, including yours, and it's true. And that's why I'm launching my new book at eapublishingmethodbook.com so you can learn the 7 steps to publish and promote your nonfiction lead and profit-generating business book in 8 weeks. But you know what? Don't take my word for it. Take it from a few of my authors, like Lori.
And I went from having an idea and a possibility to actually getting my book published.
Or Catherine.
Thank you for making my mom #1 best-selling author.
Or Mary Alice.
What he got done for me in 3 days regarding my book launch, unmanageable.
John Cody.
I've worked with Mario over the phone and online, and he's been very helpful in getting me where I needed to go with promoting my books.
Rocio.
There's no way in the world I would have been able to do this with somebody else. I've attempted it in the past. It didn't serve me. As a matter of fact, I ended up more frustrated than anything. So this has been a very seamless process.
Adele.
If you're looking for an amazing business coach, I highly recommend Mario Ficini.
Or Bill Benner.
I can't make a higher recommendation than to work with Mario Ficini. He has been great for me, and right now I won't work with anybody else except for Mario.
Hey, their words, not mine. Visit eapublishingmethodbook.com to get your copy, and I look forward to hearing your transformation as our next video success story. Once again, that's eapublishingmethodbook.com. And we are back with the imperfect action round. Stephanie, are you ready to take imperfect action?
Yes.
I have 3 questions for you, 60-second or less answers. The first one is, what is the fastest path to the cash?
The fastest path to the cash is having a plan and seeking out somebody who has done it before you, to show you how to get there as quick as possible.
Excellent. Number 2, what is the biggest problem you see your prospects making and the fastest way for them to fix it?
The biggest problem, I think, is the paralysis of analysis. I see a lot of people that won't jump into the deal and then it's full and they miss it. And then the same thing happens maybe a couple times and they just sort of give up. So I think you got to, if you think it's a good idea, just, when you do your due diligence, you gotta jump at some point.
I love that. And I agree 100%. Number 3, what is the best way to maximize customer lifetime value?
For me, I was an insurance agent for 16 years before, but in this particular field that I'm in now with investors, I'm amazed at just how much just the little things mean to my investors, which is I pick up the phone every time my phone rings and it's one of my investors. If they need something, I get it answered. The goal is within the day. If I can't, then I definitely communicate that to them. Send them a happy birthday note with a little, something. And it's just, for me, it's really amazing how those little personal touches really mean a lot in this world. And even just like picking up the phone and being able to talk to me, at any time it means the world to them. And so it really, unfortunately, the bar isn't set super high, but, knowing your investors and knowing what's important to them and providing really great customer service, really, it lasts. You will have a client forever if you do those things.
Great answers. With all the books I publish for entrepreneurs and successful people like yourself, I always like to ask what books have impacted your business. What would you say to that?
Oversubscribed is the name of the book, and I don't have the author, but I'm sure if you look it up, you can find it. I love that book because it talks a lot about just how important content is, and really creating a small group of people. It doesn't even have to be a big group of people that become your raving fan, and how valuable that is, and really how to do that. And then the second one is Killing Sacred Cows. And I always bring that one up because I think it's a great book for people our age, any age, really, to examine how they feel about money and why they do. And the Killing Sacred Cows just references these ideas that really need to be killed. And we need to challenge some ideas to get to the wealthy place we want to be.
And who's the author of Killing Sacred Cows?
That's Garrett Gunderson.
That's what I thought. And yeah. I got to admit, I typically don't do this, but I've seen more and more shows do it recently, and I'm getting really comfortable after hundreds of episodes. I tried to stare at the camera the whole time, but I do have multiple monitors. Is oversubscribed Daniel Priestley?
Yes, that's it.
How to get people lining up to do business with you. Yeah, that looks awesome.
Correct.
And Expert Authority World, I want to know what you think. Are you offended that I looked away, or are you happy that we narrowed it down? So I literally have never really done that. I try to, but you piqued my interest, and I was like, I wonder who it really is.
No, not at all. That's fine. That I should have that written down myself. So, but it has been a life-changing.
There's so many good books out there. I think, because I do a fair amount of interviewing also, and it's like, there's so many of them. I don't really expect everyone to know every last little one. And there's people I've had on, they have a bookshelf behind them, and they're still like, I'm like, I can see the name. Can you? So it's a lot of fun. Where would you like people to learn more?
You can go to my website. That's the best place. It's www.erbewealth.com. And we just uploaded an investment report there that talks about the 5 reasons that this type of investing might be for you. But other than that, I have tons of content that just really educates people into this type of investing and why it might be a good fit for you to look into.
Excellent. Well, thank you for sharing with us. It's been a pleasure. I hope you enjoyed it as much as I have.
Yes, it's been great. Thank you so much.
All right, Expert Authority World. We have another great episode here today. I'll see you tomorrow. Have a great day, and God bless. You're already the expert, but have you transformed your expertise into a tangible asset that will generate qualified leads while increasing profit for you 24/7? And if so, how well are you promoting it? With my new book, The Expert Authority Effect Publishing Method, I take you through my process step by step. Visit eapublishingmethodbook.com today to learn the 7 steps to publish and promote your nonfiction lead and profit-generating business book in 8 weeks. Visit eapublishingmethodbook.com to get started now. Once again, that's eapublishingmethodbook.com. Thanks for listening to today's episode. I would love to know what you enjoyed most from it. If you haven't done so already, I invite you to connect with me on my new LinkedIn. You can go to it directly at eainterviews.com/LinkedIn. Once again, that's eainterviews.com/LinkedIn. Lastly, check out the full eainterviews.com site for complete show notes, the full interview video experience, links to the resources we mentioned, and more. Have a blessed day, and I'll see you on the next one.